So the biggest story right now is mortgage rates. Hi, I'm Danny Brown. I'm the CEO of Myriad Real Estate Group, and this is going to be our September market update. So right now in the greater Phoenix area, we have about 13,400 homes on the market. If you watch any of my previous videos, you know that we've been bouncing between 13,000 and 14,000 active listings. So the listing or the inventory is staying relatively flat. If you watch any of my contemporaries, they will state that there's 18,000 homes on the market. It drives me absolutely bananas that they do this. All they're doing is looking at the active listings in the MLS, and this pulls data from all over the place. You really want to focus just on Maricopa County. That is the part that only matters to us, and it's actually 13,400. So if you're seeing anyone telling you that there's more than that, they are not looking at the right data. Where do we stand in terms of sellers and buyers? Well, right now the market pretty much across the valley is very balanced between both buyers and sellers. So the number of active listings on the market versus the number of buyers that want them are really canceling each other out. And no one group has substantial power over the other, which is what we really want in a functioning housing market, right? We want buyers to have choices. We want homes to take time to sell. We want there to be room for negotiations in terms of negotiating the purchase price down, getting some concessions towards your closing costs. And we just want things to be able to move slowly and not be a race like it was during COVID or an extreme buyer's market either. So a balanced market is a good thing. So mortgage rates have dropped to the lowest point that they've been since last year. So right now we're hovering around 6.4%. If you're looking at FHA financing or VA financing for a 30-year mortgage, you're actually in the high fives. So rates are trending in a very good positive direction. And so what the housing market really needs is lower rates for longer. For a majority of this year, we've been stuck in the mid to high sevens, and that has really pushed a lot of buyers outside of the housing market, sitting on the sidelines because of affordability issues. So as we get closer to the end of the year, I think that our mortgage rates are probably going to continue to hover in the low 6% range. So a lot of the stuff that you're seeing right now is talking about the September Fed meeting. So if you watch the news or pay attention to any of what's happening with the economy, Jerome Powell, the Federal Reserve Chair, was in Jackson Hole last month, and he stated that they are going to be dropping interest rates. So they're going to be lowering rates this September. Now the debate's going to be between 25 basis points and 50 basis points. The big thing to know is that this is already reflected in mortgage rates. So mortgage rates, the 10-year Treasury has already taken into account that the Fed is going to drop rates in September. So when they drop rates in September, I don't think that we're going to see a massive move in mortgage rates because I think that's mostly been accounted for. With that being said, what signals do we need to pay attention to? So for a very long time, we've been watching inflation because it was way out of control and it was super high, right? So we've been watching the rate of inflation. Well, now we're down into the 2% range, getting very close to the Fed's target of 2% even. So I think that they're claiming victory over inflation at this point. And now what they're really paying attention to is the unemployment rate and the jobless claims. So what we really need to see the next move down, or what we really need to see to allow for the next move down in mortgage rates, is for the labor market to break and unemployment to start to increase, as well as the jobless claims start to increase as well. Now, I'm not rooting for people to lose jobs by any means, but that is the number that we need to pay attention to see if we're going to start to see mortgage rates come down below the mid sixes and eventually get into the high fives, which I think is very, very possible towards the end of this year, definitely into 2025. So with rates falling over 1% in a very short period of time, what does that mean for you as a buyer? Well, with every 1% drop in interest rates, that is 10% more in purchasing power or 10% off your mortgage payment. So right now what we're seeing in the market is that buyers have more purchasing power, increased affordability, and because of where we're at in the market and the seasonality of the real estate market, you also have negotiating power with the seller. So imagine going into buying a home and you're already seeing a 10% discount because of interest rates coming down. If we can negotiate with a seller to help you with your closing costs to buy your rate down further, you could see an even 20 to 30% discount on your purchase versus this time last year. So that is huge. So buyers that have been sitting on the sidelines, that have been frustrated over higher interest rates, the best time to be a buyer is just before a seller's market. I don't know how long it's going to last. Again, if you've watched my videos before, I've been saying that this is a window of time for buyers, and it continues to be that way, but it hasn't been this strong or violent at all this year because of where interest rates have been. Now that they're down below 6.5%, your purchasing power is very strong, and you still have that ability to negotiate. So this window of time for buyers is really a perfect storm based on seasonality. You know, the summertime into the fall and winter is the weakest time for real estate in the greater Phoenix area. So you have just more purchasing power in general, and now compound it with a over 1% drop in mortgage rates, you are sitting in a really good position if you are a savvy buyer entering the housing market right now. So if you're selling your home, don't be too upset, because most sellers turn into buyers, remember, and most sellers are upgrading their home. So if you're selling a lower priced home to go into a higher priced home, make sure that you're taking that into consideration, that if you're having to, contribute towards a buyer's closing costs and you're contributing, 2 or 3% on your sale, if you're getting that same 2 or 3% on your purchase of a bigger home, you are coming out severely ahead because you're upgrading in a home. Now, if you're downsizing, then maybe, there might be a conversation to have, because that's happening in reverse and you might actually lose some money. So it may be a good idea to wait until the market shifts a little bit. But if you are looking to upsize or upgrade your home, as a seller, you could still take advantage of the fact that the market is a little bit weaker, because you're going to gain way more on your purchase than you would lose on your potential sale. With that being said, most sellers should expect to negotiate when they list the home. Right now, the average sales price to the final list price is 98%. So that means, where you list the home, you do have to do price reductions. Once you finally get an offer and go under contract, that average sales price is at 98% of your final list price. You also cannot list your home high to negotiate down, or because your neighbor down the street sold a couple of months ago, at some price, you probably shouldn't even list where they sold at. You probably need to list below where they sold at, just because of the nature of seasonality. That does not mean that home values have decreased or that the market is crashing. This historical trend is super normal this time of year. So the media will have you believe that home prices are falling, but the thing to remember is that this happens every single year around this time, especially in the Sun Belt, where it's hot during the summer. All of the states where it's also hot and humid face the same thing in terms of their seasonality. People go on vacation, people leave town, people don't want to be outside. You do not want to run errands in Phoenix in the middle of the day, including going in and out of homes and getting in and out of a hot car. So we always see the volume of sales, the list prices fall in these summer months, and then we see massive gains in the springtime. So don't believe everything that you hear from the media. Home prices are not falling. This is just due to regular seasonality. So my predictions for the end of the year, going into the fall and into the holiday months, is that I think that interest rates are going to hover kind of in the low 6% range, unless we see some sort of major economic data that shows that unemployment has jumped up significantly, or the jobless claims has jumped up significantly. If everything stays relatively calm, then we're going to continue to see mortgage rates hover in that low 6% range. I think sales are going to remain relatively muted towards the end of the year. We're coming up on an election. I have a lot of conversations with people that are just wanting to wait, regardless of what you think. They're wanting to wait until after the elections to do anything. So there's just a lot of uncertainty in the markets right now. Again, I think that if you're savvy, you can really take advantage of that uncertainty. But for the most part, I think that people tend to follow the masses. And so for the end of the year, I think that it's just going to be relatively quiet, balanced market between buyers and sellers, and just kind of more of the same that we've seen this year in terms of low transaction volume overall. So this is my September market update. If you have any questions, definitely leave them in the notes. Don't forget to give a like and subscribe, and we will see you next month.